New data out this morning on China's economic picture and the prospects for an economic rebound there. Let's bring in China Beige Book COO Shehzad Qazi, who has fresh insights on the first quarter. Joins us right here. Shehzad, good to see you. So you say there was improvement in the first quarter by most of the metrics that you look at, although you still have questions about a more sustainable rebound than that. Authorities seem more interested in putting in a floor than really stimulating activity. Elaborate on that a little bit.
Yeah, I think that's exactly right. So there's no question about the fact that Q1 was solid. Year's off to a pretty good start here, especially because of the holiday travel that we saw. And there was clear improvement even into March, as a matter of fact. The real question is this sustainable? Do we get back-to-back, quarters and back-to-back months of just solid improvement? And of course, can China then hit its stated growth target? Or do we start to see a clawback? Do we see consumers pulling back? Do we see further weakness in the property market, where, of course, housing remains in very much a crisis? So those are the concerns that I think we have as we look out for the rest of the year.
You know, we are just coming off this week where Treasury Secretary Yellen was in China and, of course, articulated some pretty familiar critiques of the Chinese approach, more or less saying, look, domestic demand is something you should try to encourage as opposed to being export-led and property-led. Is there any resonance to that, or is it basically just, sort of status quo?
Yeah, a couple of points. First of all, the Communist Party itself is very interested in re-engineering the economy and transitioning the economy so that it's more consumer-led. That said, that is not impacting their industrial policy, which is what the secretary was concerned about. One of the key things that we saw all of last year, for example, is that markets were panicking about a China manufacturing collapse, but Chinese factories were actually pumping out the products. They were cutting prices. And of course, a lot of that stuff is being dumped abroad. So manufacturing strength will probably continue. They especially want to focus on things like EVs and other, the strategic sectors as they're starting to define them, provide them policy support. So I don't think what the secretary said is going to impact the Communist Party's industrial policy in the coming years even.
Well, you mentioned the EV situation where China is building up a tremendous amount of capacity and driving prices down. That seems to be a flashpoint here. Where do you see it headed in terms of, just that overall market and China's ambitions there?
I think, our view is we're headed toward another trade war. Regardless of who's president next year, they're going to absolutely have to take this issue head on. Some members of Congress have already begun putting out very aggressive proposals. I think we're headed for a new round of tariffs and something far more aggressive even maybe than we got during the Trump years.
Is it your sense that that the Chinese authorities are kind of prepared for that? Is there, how does it game out in terms of the back and forth?
Yeah, look, I think they're going to do their absolute best to skirt, how to do this, right? Which is why a lot of members of Congress would tell you that we need to make sure that we're putting tariffs on any Chinese cars being produced in Mexico. We need to get rid of the so-called Mexico loophole and so forth. So I think there is going to be an attempt to skirt those, as I said. And of course, between now and the tariffs come, there's a lot of time and a lot of opportunity, especially in Europe, for Chinese cars to be exported out. Of course, we don't have Chinese EVs on our streets just as yet.
Sure.